What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And early tonight, we have a rather ugly red candle forming on the Bitcoin's 4-hour chart. And we need to discuss. It's been about 4 or 5 days since the last update. And with this action, I think we've got enough evidence and enough candles printed on this chart that we can determine what the next move might be. In review, on the last video, we talked about Bitcoin approaching the purple line and possibly holding that purple line as support. I think we were down here just above the 200 and below the 50. And I was talking about getting above the 50 and finding support there. And if we did, we would make a run for the purple. That happened. Well, we wicked up to the purple, and now we can definitely call it a rejection. By the way, this is not financial advice. Anything and everything I say in this here video better not be taken seriously, because it could all be complete nonsense. So keep that in mind as we move forward. Currently, with this fat red candle forming, we see that there is a sharp crossover on the stochastic, where we didn't even make it up into the overbought section of the chart. I thought we would make it up into the above 80 line up here. And it looks like that fast line, which is the blue one, it just something spooked it hard and boom, there it goes. Now, could it be news? Maybe. It could be the tensions going on between China, Taiwan, and the United States with our lovely lady, Nancy Stock Trading Pelosi, over there meddling, visiting with the Taiwanese people and the Chinese, doing the old saber rattling, sending battleships and tanks, saying, if you send Nancy and the coalition here and the battleships from our side, that we're just going to start blasting. That might be what spooked them, spooked the market here. But there's a lot of uncertainty in the market right now, where everyone was just feeling so bullish and so confident since we started this move after making it back above the big red dash line, and we had this trend going right on up. And I don't know, guys, I don't think we're going to be hanging around long at the purple line. So now we're going down. So what is the next move? How long will it take? And what are the possibilities? That's what we're here to discuss. Well, first of all, the evidence. The crossover, a sharp crossover before making it into the oversold, overbought zone. That is very, very bearish. Second piece of evidence, the rejection at the big purple dash line. Okay, we had the rejection there. Third bit of evidence is this nasty red candle that looks like it has blown straight through the 50 EMA line, exponential moving average. And it is now ready to fall below the cluster of popular buying and selling volume on the VPVR. That box right there. We're right at the bottom of that box. With momentum turning this sharply on the stochastic, this is wanting to go down. Okay? And that says that we're about to fall out of this box. So if we drop out of that box, we're going to poke through this slip zone, and then the next possible area that we could find support will be down here at the 200 EMA line on the 4-hour chart. If we fail that, which we certainly could because we're so early in the stochastic crossover here, it's not like we crossed over way back when. Like, let's just say if the stochastic cycle went all the way up and then all the way like this. Let me get the other line on here. Let's say this is what it looked like this. Let's say we're already nearing the bottom of this movement here. And let's say that coincided with this price. That's bullish because we're already down at the bottom, getting ready to cross into the oversold zone. But that's not the case. We didn't even touch up here, and we're early, very early right here in the crossover. And we have a fat red candle. So the momentum of the downward movement is aggressive because that's not much movement on the stochastic. Third bit of evidence, or was I on number 4? I don't remember. The MACD ain't looking good, guys. First of all, we had a peak here. We had a peak here. And on the correction here, we had this low point. On the next correction, it looked like this was a low point, but we just unfurled. Now we're headed south fast. So this dip is done. And we went all the way up here, and the price that we returned was the rejection at the purple line. Now, you want to see higher highs and aggressive movement upward with each stochastic peak. Let's just look at them again. There's a peak. There's a higher high. Very nice. Higher high. Very nice. And then we had the downtrend. And now on this peak, we just kind of matched what we did before. Look here, from this whole zone here, and you had this big trade. This is a fake out. Let me go up here and show you something. This is a fake out, a trade off candle, I like to call it. This one, you can just count this as a nothing burger when that happens. When you candle up and you come right back down and you have two identical candles, it's like this one. So the fact that this went above the purple line here and then gave it back so quickly, it nullifies that move. Now, we did make it above here and we were wicking hard, but it kept coming back, which says that, you know, we're barely hanging on to the purple as support. But then the strong move gave up. We moved up, we got a full candle close, and then we gave it back with a full candle close. That's very weak. All right. So now we have a false positive where this was a crossover to bullish. It was supposed to go up here. And then notice how it crossed over again. It doubled back over, and now it's pointed this way. So we had one tick mark of the histogram going green. That was it. Now it's about to go back below the zero line down here. All right, so we're going to get one of these double dips, just like we did here, where you had a dip, a fake breakout here, a fake crossover, and then you had another dip into the negative land on the histogram. So we're going down. All right. What can catch us? Let's look at the volume nodes. We stick out here at 22,000. We really stick out here at 21,000. And if we go all the way down, we can come down here to 20,000 or 19 and change. Those are the possibilities for right now without getting too ridiculous with the predicting. All right. Now let's jump to the 1 day and see what it looks like there. Then we'll look at the 1 hour and then we're done. On the 1 day, it looks ugly and it looks like we're finishing off something of a huge bear flag. Some people are not calling it a bear flag. I am. So flagpole right there, channel right here, bouncing around in this channel, making a very long extended flag. Where's the momentum? Down, point down right here. Whoops, that was supposed to be an arrow. And we're in red action here, headed towards the point of control price just above 20,000. And it looks like if we fail this line, this downward trend line, we could have a massive drop. That could be the capitulation of this movement. If you do the measured move, it could get really ugly. And I don't know if this will happen or not, but you take this, you place it over there, and it goes off the chart. I don't know if that'll happen or not. We'll just have to wait and see. MACD looking bearish. Look at this. It crossed over here, bearish, but then it bounced off and started to go up. But now here comes another crossover. Fast line is touching the slow line. And so we had peak, peak, and this could be peak. And then we start doing this. Okay. Now, where it stops, nobody knows. It's too early to tell. If we scrunch this down a little bit like so, we can see the action there. Now, see the thick of this node? And after that node, there ain't nothing left to catch us down below. So once you get out of this here, this node, there ain't nothing to catch us. That's why the red dash line is so important. Because if we fail the red dash line, it's time to go downstairs. And I know everybody is out there saying that we can't go below 21,000, 20,000, that we've already hit the bottom. It is possible that this was the bottom. However, we have nasty market conditions and we have massive uncertainty with the threat of World War III. And we have printing of US dollar. We have increasing of interest rates. We have Michael Saylor stepping down as the CEO of MicroStrategy. Now, I don't think that's causing Bitcoin to go down. But there's enough things out there in this economic condition in the conditions we have that could be influencing the Bitcoin price and working up to the point where we fail this low point. So I don't know. It's 50-50. Nobody can tell. Some people swear that that has to be the low point. I disagree. Just because in history on the 3-day chart that we've never gone below the lowest point after death cross, that doesn't mean that it's going to continue now. Okay? You could be making 3 or 4 historic moves on a chart that fits into a much larger chart where after 3 or 4 it does something different. So we don't know. We just got to wait and see what it is. We also have the U.S. government lying to all of you, saying that that the inflation rate is at 9.1%. It's not. They're lying. It's about 18%. They're back there in the shadows recalculating the way that inflation is determined. Now, if you take the way they did it in the 70s and the 80s, the inflation rate right now is 18%. Put that into your pipe and smoke it. Actually, they're smoking something. I don't know what it is, but they're smoking. Okay, 1 week chart, then 1 hour, then we're done. Big picture, we see, this is ugly, all right? Here we are right here at the top end of this cluster. Then, of course, when you look at the parts that stick out, it's 19,000-ish. And then if we fail that, there's 15 to 14. If we fail that, then here's the big one at 10. I mean, anything can happen. The only good thing about this chart is this right here. If this stays that way and continues to crawl up, it'll save the day. If it fakes us out, we're in big trouble, because what can happen is this curls over, just like it did there. You see how it was coming up and then it flops, comes back over? Look how it did here. It looked like it was going up. It flops and goes back down. It can do the same thing. And you have somewhat of a head and shoulders formed on the stochastic with a decline. I don't like the looks of that. I don't. But just looking in history, we see several points that we were coming up on the 1 week stochastic and it flips over and goes back south. Just like when it can stay up here at the top, we can flop and we can go back south. I need an arrow there. That example right there, and then these two here and here. That's our history. All right, that's the 1 week. Let's look at the 1 hour, and then we are done, as my wife and son are causing a commotion in the kitchen. It must be dinner time. I better hurry up. This looks absolutely bearish and ugly. There's nothing, not much below this. Let's look at the nodes. There's a node at 21.9. That's stopping point number 1. Number 2 is 21. So if we fail 21, we're in trouble. We're going for the red line. There's the 21 node right there. So if we fail that, hello, red dashed line. Will it be support or will it not? There's the bearish cross over there. There's the negative histogram there. Peak, 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 decline. That's all you need to know. That's all I got for now, and I would love it if you would like, comment, and subscribe to the Crypto Pro channel. I appreciate all of the super thanks. Appreciate the help from you to help me cover the cost of producing these fantastic videos. And stay tuned. I'll keep you posted, and I've got some altcoins that I will be talking about very soon. In particular, Matic, and there's a micro project called Polylastic that I'd like to talk about. And then we're going to talk about KDA, Flux, and Cadix some more. So thanks for watching. This is Carlton, and I am out.